Ladies and gentlemen, K-Kim here. Welcome to the market update. Hope you guys had a good day trading today. Market is up slightly. As you can see here, S&P is up about 0.3%. All across the board, market is up slightly. It's been grinding pretty much all week this week. And so I think, the biggest kind of, we're seeing a little bit of a jittery action here, a little nervousness, a little uncertainty going into the election in November. We have another week left to trade for the month of October. We got full week next week. And so I think, as the market makes a move after he found support at 320, right? That's that higher low we've been talking about. As you can see in the longer term picture, we've been faithfully cultivating higher lows and higher highs here. And that's what we like to call an uptrend, right? We're in an uptrend in the long term. And I think after that move, we pull back a little bit. We're retesting that vicinity once again. And we're trying to figure out, is that going to be the higher low in the more of an intermediate term, right? Before this market making to new all-time highs, continuing higher. And there's a lot of nervousness to, how this market is going to behave prior to the election. I think a lot of people were a little bit more skittish going long, just because maybe historically, prior to the election, market tends to maybe lag. We actually didn't see that much of a lag. We did see a pullback here back in September for about 10-12% here. And actually, market rallied pretty swiftly. Another V-shaped reversal. It just last week and a half or so, it's been grinding every single day. At a level, I think, pretty prominent, pretty clear, well-defined resistance, potentially new support level, which is at 342 level. Keep in mind, this market does respect some of these levels. And just looking at this market since the March lows, this market has been respecting these prior resistance as potentially new support. Maybe not as clean as what we're doing right now today, but you can see back in June, right here, right? That's a prior resistance. It was kind of all around it. It wasn't clean, but definitely played out here, right? So that June swing high became new support in July, middle of July, and price went from 310 to 360, right? And that was a pretty big move. Not only that, we saw something similar here, right? That's an April resistance and June lows as new support. We saw something similar here. That's what I like to call rising pivot. Prior resistance acting as new support. And I've been covering this every single videos or on my videos, back in April, March, May, June, looking at these levels. And I have to say, this market has been respecting these important technical levels to the T. Not always clean, but it played out in certain ways that respected those pivots. The question is, are we going to respect this level once again that we're dealing with that 342 level, right? So let's try to figure that out. I have some tickers here. I actually took a nap, really good nap before I started this video. So I have a lot of energy today. So I'm going to go through a little bit more equity positions here. And we got how many tickers go through? Google, Southwest Airlines, FedEx, Alibaba, Tesla, Zoom, DOCU, ROKU, Microsoft. So we got 1, 2, 3, 4, 5, 6, 7, 8, 9, including Spider 10, VIX 11, Gold 12, Bitcoin 30. So we got 13 tickers to go through today. I will follow up on a 65-minute spider analysis we've been doing on the daily update videos Monday through Thursday. And it is all coming up right now. So let's follow up on that spider 65-minute analysis here, and then I'll go back to the daily chart, look at all those tickers. So let's actually zoom in here and try to figure out what happened today. So this is today's price action, right? We pretty much went all the way down, all the way back up here. So it looks like we gapped up. This is where it closed yesterday, right? 1, 2, 3, 4, 5, 6, right? Keep in mind, my candles are adjusted to 65 minutes. 65 minutes. So each candle represents 65 minutes because there are 6 hours and a half in 1 day trading. So each candles are well proportioned. Otherwise, if you put in an hourly, I think the last candle is only going to be consist of 30-minute worth of data. Anyway, so this is where it closed yesterday at around 344. We gapped up today. You can see that. And then it filled the gap. That's the first hour. We continue to lower on the second hour, and we're trying to hold my short-term moving average. It actually broke below the short-term moving average on the third hour, continued lower. My mid-term moving average was there. We found some support. Some dip buying activities occurred. You can see the price gone back up here. And this is a fourth hour. We came back down to retest, almost like a little micro-term double bottom here. And then another dip buying activities occurred. This time we closed the fourth hour with the green candle. This is actually what they say in candlestick analysis, kind of a tweezer bottom bullish reversal pattern, right? And so we have that, and then fifth hour, right? Fifth hour, we saw follow through to the upside, reclaimed my short-term moving average. So that micro-term resistance right here, right, with that two candles hanging below that level, we finally closed above it on the fifth hour. And the sixth hour, we did see a push, gotten back up to near to the level where it opened this morning. So that's kind of like a micro term price action there. Let's kind of zoom out so we get a little bit of better picture looking at things from more of a short term, right? So when I say short term, I mean maybe a week or two here. So looking at about a couple weeks or week and a half price action here. So in the short term, we still are in a downtrend, right? We still got these lower highs in place. Right? We got the lower lows, slightly lower highs here. But we got something we haven't seen in a long time is, could this be a higher low for the first time since this downtrend occurred in the short term when it topped out at 354? And then it came all the way down here. We got that low. We have that potential higher low. We don't know that yet because the price needs to get above it, pull back, and then at the time we can say, okay, now we got the higher high here. Because I think this, so I'm going to put this one here also. 346, 345 is important level. So that's where we saw these lower highs. If the price can get above 346, 345, that will be the first time you'll see this thing maybe getting up, clear this swing high or lower high there, and then, if it pulls back and then get back up, in that process, market would have higher lows and higher highs. And right now, market is trying to break above this falling resistance. We did slightly cleared above it, but in trading, that doesn't mean a whole lot. It's poking its head up a little bit. It's never a confirmation. That's why we should focus more on a trend itself. Cultivation of higher lows and higher highs more than price slightly breaking above some of these levels. How many times you saw something like that and then fall right back down, right? That's what you call a head fake, where it just goes up a little bit and then just like falls right back in. So you don't want to put too much, you don't want to rely on that too much. We are breaking slightly above it, but I'm not too concerned about it at this point. I'm not going to put too much weight into this because that we're just breaking slightly above it. What I really want to see is how this market is going to behave next week, and if this is going to go up and cultivate higher highs here for the first time. So 346, 345 is an important level for the buyers to reclaim and start cultivating higher lows and higher highs. If we start falling from here, we still have to categorize this level as a lower high, right? Because look at that high is definitely higher than this high. Even the subtle, that's definitely a lower high. And that means if this thing starts to fall and break below this neckline here of 343, it's coming back down to make lower low. So looking at the purely price action point in the short term, we're still in a downtrend. So let's actually zoom out here into the middle term. Midterm, I mean like month or two here of a price action. So when we go out, zoom out like this, we get a better idea where we're at. So looking at a midterm, we are in an uptrend, right? That's a higher high here, right? And we got higher lows. And we've been trying to figure out last week or two, where are we going to see that higher low cultivation, right? Because we already got higher high here, and that's good. Because that means we're still in a uptrend in the middle term, right? In the midterm, and we got these higher low cultivation. Only thing we're trying to figure out is, well, are we going to find bottom at 340, 342-ish, or are we going to come back down to 335-ish or not, right? So looking at the overall picture in the midterm, we're still trying to figure that out. So what we're trying to find out right now is, let's check out that oscillator and maybe it will give us a better picture. So what we'll be looking at with my oscillator is that we have this double bullish divergence, right? Because definitely you can see that these are lower lows. And my oscillator has been cultivating higher lows. And that's pretty rare. Not only that, it broke out of this resistance now, and we continue to advance. And bulls have more room to move. Bulls are not tired. If they truly want to utilize this, they're not tired at all. They got room to move. Last time they did bring it up. You can see here, there are some up and downs, but you can see went all the way back up, right? All the way back up to the at the top of his band. And this is kind of what happened back in late September. After he gave us that bullish divergence here. You see that? You guys remember that? Right? That bullish divergence. And that was the bottom at 320 in September. Right? That was a bullish divergence. And then this thing moved up all the way to where? Top of his band. Right? Top of his band. So looking at here today, we have double bullish divergence, and my oscillator has not yet gone all the way up to the top of its band where we still have room to move. That means there's a good chance, as long as there's no shenanigan gap down or shenanigan sell off, there's a great chance that because buyers have gathered some momentum here in the last couple of days. Looking at this and this here, this is first time we got that higher low cultivation working here for the first time since this decline. And we got that bullish divergence, and we have my oscillator advancing, and the prices as of today, as of now, trading above my short-term moving average and my mid-term moving average, and we're trying to clear that downtrend resistance as well. So 346, 345, there's a good chance early next we start breaking above that, start pulling back, and start cultivating that higher lows and higher highs. Once we see something like that, I think the market is ready to get back to the all-time high, even making new all-time highs there. So it will be very important next week, kind of re-examine this situation here. Obviously, I'm going to come back for you guys every day next week. We're going to reassess the situation together. But So just looking at this here in an overall picture, right? Looking at my oscillator, looking at some of these moving averages, looking at the overall price action, looking at that short-term, micro-term higher lows here. So as of today, I'm going to label this market neutral in the short term. I'm not ready to say neutral to bullish yet. Once we break above 346, however, next week and close up, let's say on Monday we close above 346, 347, I'll be neutral to bullish. And then in the short term, and then if you start pulling back and cultivating higher low like this, I will be bullish. I'm going to label this market bullish in the short term. Obviously in the midterm, we're more neutral to bullish, right? Because my midterm moving average is still still moving sideways, and the price needs to break above 346. Once price break above 346 and stay above it, I will be bullish in the midterm, not just neutral to bullish, but it will improve to bullish. And the short-term sentiment actually improved. I think earlier this week on Monday and Tuesday, I was bearish. And I think even last week I was bearish in the short term and neutral to bullish, I think, in the midterm. But the short term sentiment improved to neutral. No more neutral to bearish, but neutral. Midterm, neutral to bullish. So slowly, ever so slightly, you can see that market is giving us a little bit more information, and things are starting to look a little bit more bullish here going into early next week. Let's go to a daily chart here. Kind of look at the overall picture here. So when you look at a daily, it's a different feel, right? Because as we're analyzing 65-minute chart, we're kind of looking at more of a shorter term. Because what we were looking at was this. This is what we're looking at, right? That's what we're looking at. But as you really zoom out, looking at things longer term, we can definitely say that we are bullish in the overall picture, because market is holding this level. Keep in mind, sometimes it's never clean, like somewhere here, right? This was never, there's some up and down underneath that. So this thing might come down to, 338. It's still bullish looking at the daily chart. That's why you got to understand the shorter term sense and also the bigger picture. Because I think so many people draw that line where, man, this thing breaks below 342.24. I'm going bearish. And then it'll go to like 340. 150 and then just goes right back up, right? So you kind of want to give it some a wiggle room to market to find its support, discover certain price levels before making a move. So I'm not going to spend too much time on this daily chart because it's been looking same as last week or weekend before that. So we want to continue to give benefit of the doubt to the buyers. My shorter-term moving average is still rising. My mid-term moving average is still rising. My long-term moving average is rising. My much longer-term moving average is rising. My really long-term moving average, they both crossed here. That's what you call golden cross, right? And so, we're cultivating higher lows and higher highs here. So as long as the price is staying above some of these levels, like 326, which we are 335, anywhere this level, as long as the market is cultivating higher lows and higher highs, we want to continue to give benefit of the doubt to the buyers. Meaning, if you're a long-term investor, you've been long since, March, April, June, July, there's nothing to worry about this. So this is not a level you should be worried, concerned. You know what I mean? Because market is doing what it's doing, just been kind of grinding this week. But overall posture and overall sentiment is bullish, and that's how you should be treating this market. All right, let's go to VIX here. So looking at the VIX, so we've been talking about this year, VIX been pretty much just sideways here. And this is where we talked about this a few weeks ago or even last week, where you can see it looked like it was going to break down and then it gets right back up, and it looks like it's going to, it looks like, oh my God, look at that resistance. It looks like it's going to come back down. And, if this thing goes up here a little bit and then comes down. So when the price gets consolidating like this, you never want to be too precise with your levels, right? You want to give it enough room, draw triangles or rectangles, something like that. So you give it some wiggle room so you don't, you don't get into a conclusion just because it slightly get below it, slightly above it, right? If you get really, really precise with your levels, you might have done something like this, or something like that, and you probably thought, okay, that's a bullish signal, that's a bullish breakout. Oh, look at that upper wick there, that's a breakout, and then you see how this thing coming right back down. So always give it some room here, like that, like this or something like that. So it's especially in the stock market, it's extremely difficult to time that perfect breakout. I think it'll be better, trying rather than like trying to pick the breakout level to go long. It's probably better if you think it an opposite way. Okay, instead of me trying to time the breakout, if you want to go long, maybe it's better to actually go long at the lows, right? Go long at the lows is better than trying to time the break. Not only that, even stocks too. I never play very, very rarely I'll play a breakout plays, especially when the market price has been consolidating that, because there's so much head fakes. There's so many head fakes that's going to incur. So I think it's best if you say, okay, you know what, VIX is going to go down, then short it here. Okay, VIX is going to go up, then maybe go long down there. Take a risk. Don't wait until, okay, I'm going to wait to break out, and then you go long, and then it goes right back down. So VIX is still kind of in that elevated, consolidating price level here, though this gap's been open quite some time. And I think sooner or later, it's going to come back down to fill that gap. And when the VIX is ready to come down to fill those gaps, this market would probably get into some prolonged uptrend. And if the VIX is ready to come back down to fill this gap, and we're talking probably towards the end of this year, bullish run here. So for that to happen, obviously we need to get back down and take out this pivot at 24-ish level, right? 24-ish. And it's not going to be like smooth breakdown. It's going to come down, go up, come down, go up, come down. That's how VIX moves anyway. Right? There's come down, go up, come down, go up, come down, go up, come down. So that's kind of how it's going to go, and it take weeks and months to fill that gap there. So we're still kind of in the neutral zone in the short term in VIX, but overall we have lower highs here. And so I think that pressure is still, we want to still kind of give benefit of doubt to the sellers. In the overall picture, I'm talking more of a big picture. In the short term, we're just sideways here. All right, so I got 7 equity here, or is it 7, 1, 2, 3? What did I say? 5, 6, 7, 8, 9, like 9 or so. Let's go through it here. Let's go to Google. So let's do a little bit of maintenance. So here's another pivot there. That's the pivot. Definitely, it's been acting as support there. Not only that, my long-term moving average has been acting as support. See, this is kind of what I mean. Like, a lot of people are looking at these patterns. I think we talked about it before. These head and shoulder formation, man. Last time I saw these things actually play out was like 2012, 2013. Back then, back in 2012, 2013, 2011, not many people are looking at these patterns. Not many people are studying technical analysis. Like I remember back in 2010, 11, you turn on CNBC, no mention ever talking about charts or moving averages or head and shoulder formation. It all came about 2014, 15, 16. It kind of blew up and everybody's looking at these charts. Everybody's talking about it. And so what happens in these head and shoulder formation, I don't think I've ever seen it play out. Ever. Since 2012. Last time I saw head and shoulder playing out, 2012. Like their Apple stock before the split, Apple was trading like 700. We had a head and shoulder formation, daily, weekly bearish divergence, monthly evening star reversal, and that thing crashed 50%. It all started with the head and shoulder formation. I read an article about that actually, 2012 September. Some of you, if you've been listening to me since then, you guys remember 10 reasons why I am extremely bearish on Apple. It all started with the head and shoulder formation. And I think that, and then, and just a lot of people are just like, start looking at these charting patterns or technical patterns. And then I don't think I've ever seen head and shoulder play out ever since 2012. You see how this market likes to evolve. So whatever you think, if a lot of people are looking at same pattern and thinking that's bearish, market is just going to do something different. Also, you have to understand how to not time it, but how to associate individual equities along with the overall market. If the overall market is a bullish stance, and then you have something similar to what it looks like, possibly head and shoulder here on Google like this, with these left shoulder, head, right shoulder, and you see that, okay, well, overall market does look bullish in the overall sense, then it's very, very difficult these patterns play out. Again, I don't think I've ever seen. We're talking these stocks that are highly traded. We're talking like these large cap stocks or mid cap stocks are there. Like stocks that I talk about. We're not talking about penny stocks or anything like that. I don't think I've ever seen head and shoulder formation ever playing out, and this is it's the same story here. That head and shoulder, potential head and shoulder. This was a little bit awkward too. Like, I don't know where the neckline might be. Maybe that neckline is here. And real head and shoulders formation to play out, you want to see this thing breaking below the head and neckline. But we got back down here. That gap was never fully filled. That active support. We also saw another gap up. Broke above 157.6, 1,576 level. And then now this market, or Google, is cultivating the short term, higher lows and higher highs, and we want to continue to give benefit of the doubt to the buyers. Google's been actually outperforming Apple, and I think I talked about this a couple weeks ago when I was analyzing Apple and Google. Talked about how I like Google better as far as overall, technical perspectives, because I'm looking at more of a longer term, just because I think Google had a more proper corrections along the way. When you look at Apple kind of went straight up. Right? Just kind of went straight up and started pulling back. Google had its proper pullbacks along the way, and I like about that. It had its proper pullbacks, and then we had a more steeper pullback here, and then it's getting back up. So I feel like Google's has a little bit more proper technical overall stance than Apple. Apple's looking a little bit more vulnerable, and I think that's why in the last couple of weeks Google has made a move. Apple's been still trying to find this traction to the upside. So we want to continue to give benefit of the doubt to the buyers on Google. Let's go to Southwest Airlines. I think out of all airline stocks, I think my favorite is Southwest Airlines, just because Southwest Airlines has better posture when it comes to technical perspective here. So you can see this is important pivot, and definitely we want to see, if you're a bull here on Southwest Airlines, we want to see this level breaking. And unlike, I think, out of all other airline stocks, we have a well-defined higher lows here in Southwest Airlines, LUV. We just haven't cultivated higher high yet, because we've been having these equal highs, right? So we got the equal highs and we got the higher lows, right? What does that mean when you have higher lows and equal highs? Because we're not fully in an uptrend. Because, definition of an uptrend is higher lows and higher highs. But this is higher lows and equal highs. Well, that means we're not in an uptrend. We're not in a downtrend. We're in a consolidation, or basing period, right? So we are basing out potentially for breaking out to the upside before making higher high here. So it's gone up here several times, second, third, fourth, but we got these higher lows, so we are seeing, so that pullback's been shallower and shallower and shallower, as you can see here. That's why how we cultivated higher lows, because those pullbacks been shallower. We make a move, we pull back, because nothing goes straight up. It goes move, we pull back halfway, not all the way back down, halfway, and then we get back up. So there's certain buying pressure. When we see a certain pullback, we see dip buyers coming in, propping the price back up. So the more demands that we have, the better chance this thing is going to break out of it and then finally get into an uptrend. I think Southwest Airlines getting pretty close here. Let's go to FedEx. So FedEx, it's difficult to analyze something like FedEx because that thing went straight up. I don't know last time it you can see that we actually recently retested. That's my 25 EMA, I think 25 EMA, exponential moving average. Ever since June, it never breached below my 25 EMA. You see, and these kind of stocks that you never, obviously, if you're not already in it, you never want to chase it up here. And when you're looking at stocks like this, you never want to wait until things break out. You want to be part of it before breakout. So you got to understand, after FedEx pulling back, it just pretty much crashed since it was 275, and then it went down to what? It's a 67% crash, right? And then just how quickly that it went as low as 90. So what you do is you look at a longer term picture and you come to a level where, okay, this is a level that I could get into it, and you never try to time it where, okay, the market, this is why it's very difficult to try to time it with the call option, especially when the market or the stock has gone down this much. So when I get into value stocks, FedEx was a value stock after this thing crashed, and now that it's probably back at the growth. Now it's a growth stock now after getting all-time highs. But anyway, so when market moves like this, there's very, very difficult for you to chase it up here. And problem is when you're chasing it also, let's say you chased it here and market did make a move, it's very hard for many people to hold through because you'd be scared that this is going to crash at any moment. So best thing about investing in something like FedEx is you want to go long before and start accumulating some of these levels, and then and you want to be patient, right? If you want to become a value investor, and that's what value investor means, you look for some of the stocks that are extremely undervalued, has a good potential to the upside, right? You start getting into position, and you gotta willing to go through some drawdowns. When I did, I actually started not accumulating until like 142, right? I started accumulating like maybe 142 here. I think that's exactly when I went long, and I had to go through this. So I started accumulating around 142 or something like that, and then it went down to like 90, and then I had to buy more here, some of these levels, and then I bought more when this thing actually gapped up, and now I have not touched this since. I have not closed out a single share, but I have not touched it either. I have not added any of my positions because I was already long in these levels, right? So I think when you get into it before the breakout, and then when stock breaks out like this, because you've been patient through the shenanigans, right, through the down move, the drawdowns, you'll be also patient through the up move, right? But when you're chasing it, you'll be anxious every day that when is this thing going to actually start crashing. Keep in mind, FedEx made a big move. It doesn't have to crash down. It could see a significant pullback or something like that, and then start cultivating what? Some kind of a base or something like this, and before moving higher. Especially if the overall market is in a bullish sentiment. So just because the market moved, especially after steep decline like this, we're just getting back to the all-time high level. The stocks doesn't have to come straight down unless this entire market starts crashing down again. It's different when stocks have been in an uptrend for way, way prolonged time, for years and years and years. Then there might be some corrections. Apple corrects about 50-40% every couple of years after prolonged uptrend, though, not after correction. You don't see stocks correcting and then going up and then coming right back down. Not like 60. This is how much move from the lows. Not after 200. See, this is a problem. Is people look at this, market moved FedEx moved 200% since the March lows. Well, that's not going to end well. No. That's not how you should be looking at it, because going here from here, if we just measure it from the highs, look at that. We're only up 1%. FedEx is actually only up 1% since the highs here. It took from 2018 to 2020, it only moved 1% in 2 years. If you look at that in that context, It took 2 years to FedEx to move 1.75%. If you look at things long term, yes, there will be pullback. Market doesn't go straight up. Even if this comes down to all the way to 222, I'll just probably buy that dip, and then this thing might just go back again. Right? So you always want to understand a bigger picture, and just the way the market has been, we've been seeing a lot of these kind of price action happening. Let's go to Alibaba. So Alibaba is, you can see here, and we talked about this in Alibaba also, because I've analyzed before, maybe a month ago or something like that, but that's right there. That's a prior resistance, new support. That's a prior resistance, new support. And sometimes, obviously trading in the market is never easy. You know what I mean? It's like getting into a position is never easy. This was never like clean, because you see that long lower wick at intraday. This thing did come down, but it got back. I closed above it. But sometimes, these just one solid information with technical levels, and you go long here and you add it here, boom, right? So daily chart, you can see that there's consolidation there, there's consolidation there, and then making a move. What you have to understand is that we see a move, and then this thing recovers. This thing does not crash back down to the low. That's what people don't understand. After a good correction and stock makes a move back to the all-time high level, we will see a pullback, and that's a opportunity there. And then it makes a big move. Then you will see this thing correcting. And then it will go through another up and down, building base, right? And then it makes another move. But look at that. Look at the process, though. Look at the process. Look at the low, higher low, higher low, higher high, every single time. Low, higher high, every single time. And then you get into a prolonged uptrend, right? That's when you start thinking, maybe I'm taking some profit. Or if you're a long-term investor, you don't take anything out. You say, you know what, I believe in Alibaba. I'm going to hold this thing for 10 years. Let's say you went long at 59, and then you buy it for more at 131 and 140 and 150. You're compounding. Because I wasn't long here, back here, but I was long here, and I have not closed a single share. I traded my calls up and down a little bit, but I've been a long-term investor since 2018, never closed a single share. So if you put time to risk and buy at some of those levels, right? And then you're going to go through up and downs, right? And it took me I was long in like 2019. I had to go through these COVID decline and everything else. But looking at the overall picture, you can see the higher lows here. We're an uptrend, despite the fact that there are some shenanigans. And then at some point what happens is, because the demand increases, right? So what happens is the market makes a move, and it falls back, but it doesn't come all the way back down. It falls back a little bit, and then it goes back up higher high. But it does fall back, but it doesn't come all the way back down. And then you see that demand increases, and then it breaks out, right? Let's go to Tesla. Yeah, I haven't been trading Tesla in very, very long time. When it comes like a hyper stock like best time would have been like going long here. That would have been the best time here when it came back down to retest that level right here. Now it's difficult to chase, and we talked about it last week. That weekly bearish divergence is still there. As you can see there. And again, this is not 100% guarantee thing, but we are dealing with the stock that is extended. It's very, very hyped up stock. And if I was long, I would have taken some profits at these levels and then ride the, maybe half or something like that, and ride the other half just in case it goes higher. But we're right in that support. Maybe that's the support. It's been holding though. That's a support, potentially find support there. We got another fan line here. We got gap area here. If we lose this level, this market Tesla might come back down to maybe retest that uptrend support, coinciding with the gap, my midterm moving average there. Let's go to Zoom. Zoom is same story as to Tesla. It's a very, very difficult to chase it up here unless you're short term. You're short term trading this. If you've been long, you're a long term investor from way back here, or something like that. Some of these levels, I'll continue to hold that, but it's difficult to forecast that my short-term moving average is acting as support potentially, but let's see, we got a support level here, and pretty much that's about it. It's one of these stocks that just been flying. One thing I won't do is I won't be chasing this because I'm not a short-term trader, so I will not be chasing Zoom here. I should have been long. I think I was long here before, but I got out pretty quickly. I think I was long somewhere here, and then I already gotten out somewhere up here, and then I never went back. I never went back. So if you're already bullish, if you've been long, you're a long-term investor, we have no bearish indications at this point. I don't even see weekly bearish divergence. I see nothing at this point. So we just want to continue to give benefit of the doubt. It's just that when stock goes up like this, like crazy amount of hyped up, it gets kind of difficult. I like the market properly correcting when we do see a move, like Google, right? Exemplary is Google. Google properly saw its higher lows and higher highs. We don't see kind of a proper higher low, so you can see how this thing just kind of took off and never stopped and just, you know. And you say, well, what about FedEx, Kay? You're holding full on FedEx. Remember what I said about FedEx? FedEx took 2 years. FedEx is about here. That's the difference, right? So FedEx, looking at 2 years price action performance, FedEx is about here. This thing not only broke out of the new all-time highs here, that was what? 116. It's at 511. That's the difference. FedEx came down and then got back up and then just getting to new all-time highs. This thing already got to new all-time highs and then just kept going higher. That's why if I was long on Zoom here, I would have probably, if I believed in it, I would have probably held it. But trying to figure out, you know, going long anywhere in that vicinity is going to be a difficult endeavor, and I wouldn't. DOCU, again, we got head and shoulder formation here, but I never seen it play out. I don't think I've ever seen actual head and shoulder actually playing out. Like actually, for this head and shoulder to actually play out, we're talking like topping pattern. We're not talking about, when I say head and shoulder topping pattern, we're not talking about coming down just back to here. Oh my God, right there, and then, you know, come to my long-term moving average, and then that's fine. No, when you say head and shoulder, we're talking this thing actually breaking down, getting into a downtrend. That used to happen quite a bit. 2012, 2011, S&P corrected 25% or 20%. S&P corrected 20% with head and shoulder formation. Apple crashed 50% with head and shoulder formation. There are other ones. I think there's a Google also somewhere. But now we don't see it. You know what I can see this thing coming doing? This thing maybe breaking below it and then hit one of my longer term moving average and just going right back up. So it's been sideways, but I don't blame it because it, again, same thing. Made a huge move here. They break out these all-time high level here. We've been below it for quite some time. We broke out, retest. That's a good level to go long. You see what I mean? So you want to take a risk when the market comes back down to retest some of these levels. If you're watching it and then make a run, you never want to start chasing later, because when you do, you're going to be anxious about it every single day, wondering when this thing is going to crash, and you wouldn't hold longer term either. So when you chase, what happens is you tend to get scared in every kind of little decline just because you know this thing's so extended that any moment you think that it's going to crash. So it's always best to go long before the breakout. Trying to figure that out will be the best strategy there. So potentially head and shoulder, but I don't think it's going to play out. If anything, it might break below it, fake everybody out, and then just get right back up. I've seen that happening so many times in the last 4 or 5 years. Like, I kid you not, like, so many fake out, because everybody's looking at these head patterns and they go short or they exit their long and the market just go opposite of it. So right now we're still in an uptrend. Though it doesn't have a proper correction, it just went straight up. We see a lot of these stocks like Zoom, like Tesla, like DOCU, where they just went straight up. It gets difficult. You want to be long before it. You don't want to look at it trying to figure out when you should go back long. Is there a chance this thing maybe going back long and continue? Yeah, but I mean, it's depending on what if you're okay with it. If you're okay going long on DOCU after this thing just did 350% in just 3-4 months, if you're okay with going long, you really believe in DOCU in 209, you think even 400, that's fine. Some stocks do that, you know, but it ain't my thing. Let's go to Roku. Let's see. Roku is more reasonable compared to, because you can see if I just, you know, go from here to here, that's only 25% since this peak here, and we got the rising pips. This is more reasonable versus, you know, Zoom, DOCU, and Tesla. You know, we just broke out of this pivot here. Let's draw another one. So we got 175, 186. I mean, this is probably a good buy. This thing actually comes back down to 185, 175. This is probably a good buy if this thing does come down, retest that. You know what I mean? That's a good buy. Versus just, you know, chasing stock down 300% already. I mean, made a pretty good move from here to here, but looking at more of a bigger picture like this, it's only about 20% up since this peak right here, right? But if you're already long, we just broke out above this resistance, and you just want to continue to be long here. We're retesting my short-term moving average. There's a gap area that is acting as support. I think because of the rising pivot, if the market is bullish, this could continue to grind higher. That's why you never want to chase it. When you chase it, you like always worry that what if this thing come back down, right? Unless you get in a little bit and you say, you know what, if this thing does come back down 180, 175, you just add more. Because if you really, really like Roku here and you really don't want to miss out up move, then what you do is you always get in a small position here. And then if this thing does go higher, you say, you know what, at least I'm part of it. But at the same time, you have some firing power left so that if this thing does come down 186, 175, you add more and then you can go higher with it. Just so but if you're just flat out, you're like, you know what, I don't really care too much about Roku, and so if this thing comes down to 175, I would add. Then you be more patient. You say, you know what, if this thing does go up higher from here, I'm just gonna let it be. And I'm just going to wait. So there will be different ways to play certain things. If you don't like the setup, you can just toss it all together. Let's go to Microsoft. The video is kind of getting long here. It's always so much to say. I want to do this video under 30 minutes. It's getting to 46 minutes now. Microsoft made a big move, but overall perspective is not too bad. We got, you know, this resistance holding here. We're moving again, another potential head and shoulder formation. I don't think I've ever seen this playing out. Even if this thing breaks, and that neckline will be right here. That will be the neckline. Even this thing breaks out, I'll be buying that there. There's a gap here. See, that's what, you know, if this thing actually going to play out like some kind of a head and shoulder formation, you know what, I can see this if it's going to happen. This thing comes down, retest the gap area, everybody start panicking, everybody start talking about this head and shoulder formation, right? This thing just reversing on you. I would actually buy that. Not this thing getting into a downtrend, right? But right now we're holding this pivot, the short-term pivot. If the market goes up next week, this is probably going to go up with it. All right, so there you have it. I think that next time I shouldn't be too many equity shares or equity tickers. It took much longer than I've anticipated. I always think I should just go through them quickly, but once you get into it, there's so much to talk about. And this is as fast as I'm trying to. Look at these year-to-date numbers. It's crazy. Look at the year. That's a year-to-date number. 408%, 408% year-to-date Tesla. Zoom is a 665%. DOCU is 189. And these are some crazy numbers. These are some crazy, crazy numbers. And it's extremely difficult to continue to chase those or chase after these kind of numbers. If you are already in it before majority of that move, it's great to be part of it and then letting it run while taking some off. That will be a good strategy. You get into before the breakout and then taking some off as the market moves higher, but you let some to run so that you can be part of it if the thing does continue to move higher, right? Let's go to gold. Gold is still very lethargic here, but this kind of, looks like a bull pennant, bull flagging pattern, and that's kind of how gold likes to move here. So potentially we're getting close to my long-term moving average here, and my short-term, my mid-term, my long-term, they're all kind of colliding in that vicinity. And I kind of have a feeling maybe we find some support in that vicinity, potentially making a move to the upside. Maybe we see a one pull back to the downside, maybe retest my, you see my Fibonacci that I've drawn here to here? That's my first level that is coinciding with my long-term moving average, which is 172 on GLD. Maybe we hit that, move higher, but overall, we're on an uptrend in the long term, so we want to continue to give benefit of the doubt to the buyers. One last one, Bitcoin. I'm going to let you guys go with this. Bitcoin finally made a move. Right, we've been analyzing this Bitcoin every single weekend here. So let's do a little bit of maintenance. We have island bottom reversal here. So let's turn that into green. Right, that's a gap. That's a gap down. That's a gap up. Right, there's an error here. Right, so that's a green. That means that's island bottom there. And I'm gonna move this up. And so you guys know the last several weeks we're trying to figure out what. And this is what we've been trying to do with the S&P 500 also. See, we got the low, we got the higher low, we got the higher high, and then as the market pulled back, we're trying to figure out, okay, where are we going to see that cultivation of higher low? Is this going to be here? Is this going to be here? Or is this going to be here? That's what we're trying to figure out, because we already had higher high here and here, and we got the low, higher lows, and that's what we're trying to find out. Where are we going to cultivate that higher low? And you can see we did that here. And you see, remember what I said? So you kind of want to be. So first of all, I think a lot of people are drawing their support levels like this. Here, like this. At first, I had it like that. You see this? Here. So if I go to clean sheet, and then I drew my support level like that. You see that? So that's what everybody's looking at, and people start panicking here. You see? People start panicking there because they drew that support level from the low, and then it broke below it. So what happens? The longs get scared out. Even people maybe chased it at the top because they chased it after it cleared here, and then they can't handle themselves, right? They can't live with themselves anymore. They can't go through any more drawdowns on grayscale Bitcoin. They drew that support level. This thing broke below it, and then it held there for like a couple weeks. So the longs exit, and the shorts go short. And then he reverses on you. So you got to learn when to understand, right? That's a support. Not only that, what's more important than support? The cultivation of higher lows. Because despite the fact that we had some shenanigans there, that low is higher than this low. This low is higher than that low. And this highs here, we got higher highs. You see that? And with that, with this support, because first I had it drawn like this also. I changed it to here because that's still higher lows here. And then we saw a gap up, and then we made a move. We saw another. See, that's how this market likes to move. I don't know why. I don't know how this market is designed this way, but this market just so great. It's so insidiously clever when it comes to taking your stock, making you scared, and then making a move. This is the reason why I went long here. I went long here. I went long here. I didn't chase it here. So I was going long here. So I was pretty much breaking even the whole time. What happens is when you take a risk, and then market or index or Bitcoin or in equities, when they make a move, you can sit back and relax. But what happens is when you chase after the move, you're now anxious. Now every single day you're looking at this thing. If that thing doesn't continue to move, you're panicking a little bit. And every time you chase, you never really committed too long. Most people chase at the top, or not at the top, but like after a move, they tend to be very, very short term. So when you have a plan, right? When you have a plan, then you execute those plan. That doesn't mean it's going to play out every time. Doesn't mean that it's going to play out every time. Every single week, and I talked about this, doesn't mean it's going to play out. I told you I'm going to go long here, and then it came back down. I had some gains. I had to hold through that, and I bought more, and I bought more. And maybe it means it's going to come back down. I don't know. But for now, we have so many good gaps here. We got the island gap. We got this gap. We got this gap. We got all these moving averages rising now. And now you can see we are kind of coming out of this level here, and this is important level, right? If this is a left shoulder, there's some kind of inverted head and shoulders, right? They basically all this is that we're shifting. We're shifting from a downtrend, right, with the lower highs and lower lows, right? Those are lower highs, right? And those are lower lows, into higher lows and higher highs here. And this is important neckline right here. Once it breaks out, if this, and that's the high that it needs to take out and make bigger term higher high, and that's what I'll be looking at. And then let's say Bitcoin start making a move to 24. Because I went long at 10, I'm going to sit back and relax, enjoy my gain, and I have all kinds of options. Should I hold my longs? Should I close out about a 1/3? Or should I keep holding? Once you do your job, once you execute those trades, you don't have to be anxious anymore. You just sit back and relax. Once that make a move, it will be very low maintenance. Hard part is always strategizing, executing your plan when the trend is shifting here. Well, tonight's video will be special video because I spent about an hour detailing everything, explaining all these different strategies and understanding the trend, not relying too much on those, those support levels. What's more important than supports, those support trend lines, is cultivation of those higher lows and higher highs, understanding short term, mid term, long term, right? So you don't, and also at the same time you want to give your position wiggle room so you don't choke your position to death. Also understanding that some of these levels, it's never clean. Sometimes they give you clean retest, clean breakout, but sometimes it's gonna have some fake out, fake down. So all those things is gonna come handy, and I did my best, spend just 1 hour here with you guys, and hopefully this will be helpful. Come back for you guys Monday, and we will re-examine that 65-minute spider chart and see where we're at. You guys enjoy your weekend, and good luck trading next week.